How does a company with mounting losses and shrinking equity still command a premium valuation? ABS-CBN's situation challenges conventional market logic and invites a closer look at the numbers beneath the surface. At last trade, shares stood at 3.39 pesos, nearly double the consolidated book value per share of 1.77 pesos. That 1.92 times price-to-book multiple, normally a sign of strong financials or growth prospects, sits atop a fragile foundation. ABS-CBN's balance sheet reveals 38.54 billion pesos in assets, yet almost all are encumbered. Liabilities total 36.95 billion pesos, leaving just 1.59 billion pesos in equity. Put simply, 96% of the asset base belongs to others, and what's left for shareholders is but a thin residue. Start with those who power the operations. Suppliers, producers, and business partners lay claim to 14.67 billion pesos, while lenders and financiers account for another 13.17 billion pesos. Before even considering pensions and deferred taxes, these counterparties already hold the bulk of the company's assets. For shareholders, this means that only about 4.1% of assets constitute genuine equity, and that cushion is steadily eroding. Within 9 months, total equity shrank by 37%, falling from 2.52 billion to 1.59 billion pesos. Compounding matters. Current liabilities exceed current assets by 11.16 billion pesos, signaling not just theoretical insolvency, but everyday liquidity strain. The company's income statement offers little relief. In the latest quarter, production costs and other expenses exceeded revenue, resulting in a gross loss. Net loss for the quarter was 1.39 billion pesos, and for the first 9 months of 2025, consolidated net losses totaled 2.24 billion pesos. Past years paint a similar picture. 6.1 billion pesos lost in 2024, 12.8 billion pesos in 2023, 2.6 billion pesos in 2022. Asset sales, 6.24 billion pesos worth in 2025, have largely benefited creditors, not equity holders. So how does the market justify a premium? When equity is so depleted, even modest optimism about ABS-CBN's brand, content library, or possible regulatory recovery can inflate the price-to-book ratio. Investors seem to be buying an option on future reinvention rather than a stake in robust net worth. Yet, optionality is not ownership. If losses persist or liquidity worsens, today's slim equity could vanish altogether. For shareholders in the Lopez family, this is the unsettling reality. Almost nothing remains after creditors and operating partners. And if trends continue, soon there may be nothing at all.